You are watching Market Watch, the brief overview of the key events from the world of finance. The Reserve Bank of New Zealand has once again demonstrated its penchant for unexpected moves, surprising economists and analysts with its latest decision. On Wednesday, the bank cut the interest rate by 25 basis points, bringing it to 5.25%. This was the first rate cut since March 2020 and occurred a year earlier than the representatives of the bank itself had predicted. The head of the bank, Adrian Orr, explained this reversal by the fact that the bank is forced to adapt to changing economic conditions. The central bank is confident that inflation in New Zealand, which reached 3.3% last quarter, will return to the target range of 1 to 3% this quarter. Against the background of this news, the New Zealand dollar weakened by 1%. The RBNZ rate cut has become part of a general trend among major central banks such as the European Central Bank, the Bank of Canada and the Bank of England, which have also begun to ease their monetary policy. This may serve as a signal for those regulators who are still taking a hard line in the fight against inflation, for example, for the Reserve Bank of Australia, which has effectively ruled out the possibility of lowering rates this year. As for the data from the United States, markets in Asia generally reacted positively to the information that production prices in the United States rose less than expected. This has increased hopes that consumer price inflation will also be moderate. On Wednesday, the dollar continued its decline after a significant drop the day before. The dollar index, which measures its value against 6 major currencies, including the pound, euro and yen, remained at 102.61 as of 3:15 Greenwich Mean Time, after falling 0.49% the day before. The main events that may affect the markets on Wednesday will be inflation data in the United Kingdom and the United States for July, GDP and industrial production in the Eurozone, and a speech by the President of the Federal Reserve Bank of Atlanta, Raphael Bostic. However, the main indicators that can influence traders' expectations and increase market volatility will be statistical data on the Consumer Price Index in the United States. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.